Okay, so let's go ahead and get our practice on. Let's do the study guide. Okay, so I put these in order so it helps you guys be able to go through the review packet easily, but just it's also for you to help recognize what you need to know. And of course, the exam's not going to be in order. But you know, this is just to help you out. Okay. All right, so let's go ahead and dive right in. So number questions 1, 2, and 3. Question 1 wants you to determine the account type. Okay, so is it an asset, liability, owner's equity? Is it income or is it an expense? Okay, then the second question asks you to categorize them. Are they current, fixed, other, or are they long-term? Are they operating? Are they cost of goods sold? Are they just sales? Okay. And then lastly, what is the normal balance? Okay, so is it a debit balance or is it a credit balance? Okay, so let's go ahead and work on number 1. What is checking?
Asset.
Asset.
Yes, it is an asset. And it's current.
Debit balance.
Yes, and it has a debit balance. Good. What is an accounts receivable?
Asset.
It's an asset.
Current balance.
It has a current, yes.
And it has a debit.
Yes, and has a debit balance because it's another form of cash, right?
Yes.
All right, it's something that you actually own. Okay. What about equipment? Oh my God, did I even mix these up? All right. What about equipment? I'm sorry. What about inventory?
Asset.
It's an asset. What kind of asset is it?
It's a
Yeah.
current.
Current.
Yes, because what do we know about inventory? What is our main purpose of having inventory?
To sell it.
To sell it for what? What for? Okay, for profit, but also for what?
Income.
For cash.
For cash, yes. For money, yes.
Yes.
So it's definitely current. Okay.
It has a debit balance.
And a debit balance. Oops. Oops. Okay. Anyways, yes, it has a debit balance. All right. What is equipment?
Asset.
It's an asset. But what kind of asset?
And it's fixed.
Fixed.
It is a fixed asset because it falls under the 3 categories: property, plant, and equipment. PP&E.
And it has a debit balance.
And it's a debit balance because what? We own it.
Right.
All right, good. What about land? What is land?
It's an asset.
Mm-hmm.
It's fixed.
Mm-hmm. Because it's considered what?
It's not PPE.
It is a PP&E. Which?
Property.
Yes, it's property.
Property, plant, and equipment.
Mm-hmm. It falls under the category of property. All right. And what kind of balance does it normally have?
Debit.
Debit.
Yes, because if we own the land, then it's ours. Okay. What about copyrights?
An asset.
Yes, sir. And what kind of asset is it?
Other.
Yes. Anything intangible is going to be an other asset. And what kind of balance will it be?
Debit.
Debit.
Yes, it is. Hold on, let me double check real quick. Okay. All right. What about a visa payable? What is a visa payable?
Liability.
It's a liability. Yes. Okay. What kind of liability is it?
It's a current liability.
It is a current liability because visa payable. It's a credit card. You're gonna have to owe it, and it's going to be owed every month. Okay. And what kind of balance would it normally have?
There's a credit balance.
Yes, it would have a credit balance. Good. All right, what about unearned revenue? What is unearned revenue?
It's a liability.
It is a liability, yes. But what kind of liability is it?
Current one.
Yes. What's the definition of an unearned revenue?
It's money that's owed to you.
Current.
Not money that's owed to you.
Money that you haven't earned
Oh, you
yet.
haven't received yet.
You've already no.
Made it.
Say that again, David.
You haven't made it. 'Cause it's unearned.
You haven't
Like,
completed what you need to have done. Yeah.
Exactly.
like
So
it's a sale and it hasn't happened yet.
okay, that's a good way of looking at it. But okay, so good. Now, revenues is not just only sales, okay? It could be a service. So yes, someone paid you in advance, so you owe them their service.
Right.
And what kind of balance would they have?
Credit.
Credit.
Yes, good. All right. What about a notes payable?
Liability.
Liability.
Yep.
And it's long term.
Okay. What else can it be?
Or it can be current or long term.
Yes.
Yeah, right.
Not short term.
A current
No,
liability.
Yeah, we call it current, not short term. Yes. It just depends on what the note is, who you're talking to, because what a notes payable is essentially you doing business with a specific individual, and for this one you can haggle on when you can pay him back. So you can owe them 6 months, you can owe them a year. It just really depends on who it is and what you're paying them back for.
Yes.
Okay? And what kind of balance is it?
Credit.
Credit.
Yes, it's normally a credit balance. All right, what is next? Next is owner's equity. What is,
Equity?
yes, owner's equity is owner's equity.
And it's got no category.
No category is correct.
And it holds a debit balance.
Not debit.
That's credit.
Yes, make sure you look at your accounting model. It normally has a credit balance. All right, what about owner's withdrawal?
Equity.
Yes, it's an owner's equity.
Categories none.
None.
And it has a debit balance.
Yes, good job, David. Yes, it. Why does it have a debit balance? Why would an owner's withdrawal be a debit balance?
Because it's shortening the business that is taken out.
Not shortening the business, but taking out is correct.
Okay, well, like he takes out an ATM or whatever from the business. So I figure it's shortening the business.
Okay. In other words, owner's draw, right? It reduces the equity account. So how do you reduce an equity account?
Yeah, it's a debit.
With a debit, correct.
Debit.
Good. All right. What is sales?
Income.
Yes, sales is an income. Income, or what's the other word?
Revenue.
Revenue. So if you want to put both, you can put both. You can put one or the other. They're both correct.
Okay. And it's category is operation or
Sales.
operating expense.
It's actually sales, isn't it?
Yes, it's sales.
Sales.
Not a, they can't be an operating expense. How can an expense be an income?
It's opposite of each other.
Yes, they are opposite of each other. Yes. So yes, it'd be under the category of sales. Okay, and what kind of balance would it normally have?
Credit.
Credit, that's correct. We've been journalizing this left and right. We will never ever see a positive sales account unless you're taking a discount or creating a contra account. What is cost of goods sold?
It's an expense,
It is an expense. Good.
and its category is cost of goods sold.
Yep. Pretty straightforward.
And it's credit. I mean, no, that's a debit, isn't it?
What is it?
That's a debit. Expenses debit balance.
Correct.
Correct.
Okay. What about advertising expense?
Expense.
Expense.
Operating.
Operating.
Yes.
And a debit. Debit. Right.
Yes, it has a debit balance. Yes. Okay. So good. And then what is the last one?
Supplies.
Mhm.
Expense.
Mhm.
And category is operation.
Mhm.
Debit.
And yes, debit. Okay, good job, everybody. All right. Let's roll on to question number 2, and I think I'm gonna take a real quick break after this. So right now it is 2:17. So let's just go ahead and power through a few more questions, and then we'll take a quick break. I need to take a quick break. Number 4. All right. Under the rules of GAAP, which rule states that when you establish a business, okay, you need to separate your personal and your business transactions.
C.
C.
C, business and economic. Yes, you need to know that. That's the number one, and that's also the most important rule. You need to separate your personal with your business expenses, okay? You can't be charging your business credit card for your personal stuff because you could get frauded for that. All right, what's number 5? Okay.
If I put
But do you want me to read it or do you want to read it?
it doesn't matter. If purchased a machine for $5,500, my books must say I recorded it as $500, even if I plan to sell it for $700.
Mm-hmm.
Which gap rule is this?
C.
A, cost
No,
benefits.
B.
B, mandatory. C, historical cost. D, revenue recognition. I said C.
So B.
C.
C is correct.
C.
C, okay? Remember, if you originally bought it for $500, right? Even if you plan to sell it for $700, you still need to record it at what price? At historical cost, exactly. Let's say if the question was given this way, you purchased the asset for $500. A year later, you sold it for $700. How do you journalize the extra $200? That is revenue recognition. Okay. Yes. Okay, but yes, you always, 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 forever need to record anything and everything at historical cost.
Okay.
Okay? So again, cost benefit isn't it, because cost benefit is when you're given two choices.
Hi.
Hi, who is that?
It was my phone, and I thought I muted everything, but
Oh.
I didn't.
Okay.
And it just came on, I shut it off.
Oh, sorry. Okay. Oh, wait. Why am I saying sorry? So yeah, cost benefit, right? If you're given alternatives, right? Is the cost to reveal your information going to benefit you in the long
No.
run? So that's what this cost benefit is. Monetary, right? It's already in terms of dollars. Okay? So this is kind of vague because it's not saying, is it monetary unit where it needs to be dollars, or is it monetary measurement where land is worth the 500? So that one could work there, but it's not. That's not what the question is asking. It's asking you, you're going to record it at 500 no matter, even if you potentially plan to sell it. So it's asking for the historical cost. Okay. Number 6. Whoa, everything okay there?
Yeah. I was just getting some aspirin.
Okay. All right. Number 6. Okay. Customer A purchased an item for $15.65 from your store on account. Okay. A few days later, you needed. Wait, what does that say? You receive a check for $15.65. You must properly record this sale and payment. Okay. So which of the following which gap rule governs this? As in, like, you sold to your customer an item for $15.65, and you received a payment for $15.65. What have you done? A, monetary unit. B, matching principle. C, full disclosure. Or D, historical cost.
See?
Okay, you said C. Anybody else?
Matching principle?
It is matching principle, because you're matching your revenues with the money that you receive, which is your accounts receivable. So matching principle is your correct answer. You're matching your revenues with your asset, right? You receive the same amount. That's matching principle right there. Okay, monetary unit. Monetary unit, right? It's just saying you need to use some form of currency. Okay? And then in this case, we already know it's US dollars, so that has nothing to do with the $15.65. Full disclosure, no, because you're not disclosing that this person bought a specific item. You don't even know what the item is.
No.
So there's no point to have to disclose any other information about the sale that you made. And then lastly, the historical cost. Again, you sold something. You're not going to record it at historical cost. This is for assets only. Okay? We sold something. So we sold an asset. Therefore, we're creating a revenue. Okay? So historical cost has nothing to do with it. All right. Question number 7. Okay. Cash basis is when? A.
Hey.
Revenues are recorded when cash is received. B.
I said A.
Oh, hold on. Let me finish the question. Expenses are recorded when it has incurred. C. Revenues are recorded when the sales has been incurred. Or is it D, B, and C? Okay, so yes, David, you are correct. It is A, right? Keyword cash basis. That means when cash is received and when cash is available to spend. All right. Number 8. Which of the following is not a step in the accounting cycle? Ooh. How many steps are in the accounting cycle? Off question.
7?
Not 7.
Oh, 10.
Yes, there's 10. Okay. So, is it A, recording transactions in a general ledger? Is it B, producing financial statements? Is it C, trial balance, or is it D, making, what does that say? Making decisions based on your financial statements, or is it E, close the books? Which one is not?
D.
D.
D is correct, right? You are not the person who's going to make any judgments, okay? You are just the accountant. You're just producing the financial sheets. That's all you're doing. Okay, good. All right, so right now it is 2:30 or 2:25. I'm gonna take a real quick break. I'm so sorry, guys. I need to take a break. So I'll call it for 20 minutes.
20 minutes, okay.
Yeah.
Okay.
Okay, so please be back. Let me see if it's 25, 35, 45. Please come back at 2:45.